Now it's time for our morning trade, and we're checking out FedEx, which reports its earnings after the close. It's up off the lows, but hasn't been the best of the best in the last 12 months. Schwab Network contributor Sam Vadas is with me to talk about what folks are expecting from FedEx today.
Very good morning. Well, it's such an important company, isn't it, obviously, Nicole, because it tells us so much about a few things, particularly when you look at some of the shipping, the supply chains, the tariffs, the U.S. economy, how businesses, how consumers are feeling. And so this is going to be really interesting to see what this company has to say about a few of those trends, of course. As far as the numbers are concerned, that lets you run you through the expectations today, looking at adjusted EPS of $5.93, a pop on revenues of $21.7 billion. But as Nicole pointed out there, it really is going to be a test for the stock right now, because sitting up about 0.5% today, really amid the broader sort of gains that we're seeing across the board here. But if you look at the 12-month period, down around 10% or so. Year to date, down around 16%. Really, we did see it sitting over $300 at the height of COVID. It had managed to touch those levels at the back end of last year, but has since been struggling, obviously coming off during the whole Liberation Day episode, of course, given some of the concerns around what that's going to mean for tariffs. But it really has been sort of stuck in this sideways action. So right now sitting at 230 and change. So as far as what the analysts are saying going into this, I've seen that Barclays maintained overweight rating, but cut the price target from 350 to 330. That was at the beginning of June. And then UBS, a buy rating, but cut the price target from 331 to 311. That was on May 28th. So what we really want to hear from this company is what it's going to tell us about tariffs. So whether some of these businesses and also consumers were basically holding off on some of their orders and their shipments because of a lack of visibility around that. Were happy to basically just sit on their hands and survive on what they had, or if it was a case of the opposite, whether we did indeed see some front loading because of the easing of some of those tariff tensions and some of the delays that we saw on that as they tried to get ahead of some of those duties once they were officially implemented. So that's going to be really important. There is a view out there and an argument that the tariffs could act as a bit of a tailwind to rates, because if we do indeed see disruptions to supply chains and overall shipping, then that actually could add to FedEx's services value. But then the drag could potentially be the small and medium-sized businesses who very much rely on some of those goods coming from places like China. The de minimis policy has also been, of course, under scrutiny. That's going to be important as to what they've said about that, because we do know that FedEx did implement about 45 cents per pound surcharge for shipments from some of these locations where these packages were coming from. And we know that UPS also introduces similar charges too. So there is an expectation, Nicole, going into this as far as some of the trends that shipping volumes recovered in the back end of May as some of those tariff worries did ease. But it's going to really give us a read now on shipping demand, particularly when you look at some of the duties, but also some of the other geopolitical concerns going on here as well. No doubt a very good barometer of the U.S. economy. We do know that a lot of those packages and the shipping and the online purchases and spending really peaked after COVID, but this company has been struggling since then because of course, that trend coming off.
Sam Vadas, thank you. A good look there at FedEx. We're getting you ready for this preview for the trade, as well as we're getting more and more details out of FedEx. Tim Biggam, options strategist at Buy Alerts, is with me to look at an example trade for us today. Your thoughts on FedEx for today? What would be an example trade?
Yeah, absolutely, Nicole. I think that FedEx is kind of finding its footing here. Certainly the lows post the Liberation Day sell-off, not only in FedEx, but stocks generally, has been met with a very nice rally. But starting to a little bit stall out here. I think you can find some support now on the chart right around that 220 level, which was going back to the last earnings, which were a miss, which kind of torpedoed the stock, and big time overhead resistance at 240 here. Market makers pricing in about a 7% or so earnings-based move here, which would put it right outside that kind of support resistance area. I'm kind of using that along with the technicals to structure a very short-term iron condor trade, simply going out selling this week's 245, 250 call spread, and at the same time selling the downside, right? The 222.15 put spread, collecting over $1 on this. So like the kind of risk return of approaching 75%, have a very nice cushion on the stock, which really lines up to that expected market maker move range and is outside of that support resistance area. Getting about 100 IV for selling this week's options. I think a lot of it because of last earnings, where the earnings were such a big miss. It kind of carried over, bled forward. So I think it's a little overstated here. So I don't mind kind of positioning, take advantage of IV, give myself that nice 7% up or down cushion on the stock here for it to move post earnings. And I think FedEx and the overall market probably going to stall out somewhere around here simply because the market has such high valuations. FedEx, conversely, trading at under a 15 PE, so not very expensive, certainly compared to the stock market.
All right, Tim Biggam, thank you so much for that example trade there on FedEx, option strategist at Buy Alert.